Boom, we're live, and I hope this is coming in loud and clear. Hello, friends. We're going to do big things, get stuff done. It is Saturday. It is September 30th, and it is the end of the month. What does that mean to you? Why am I on here on a Saturday evening telling you about the housing market? Well, it's because we now have the entire data set for the month of September. And I am committed to sharing the truth so you know exactly what is happening in real time and can make the best decisions, are empowered with the best data, the best information to go out there and advocate and negotiate for yourself the right way. Ain't nobody overpaying on my watch, and ain't nobody not finding the one buyer on planet Earth willing to pay more than anybody else if you're thinking about selling. And if you need help anywhere, please reach out because we would love to help. Now, I know many of you who are watching this are going to see the thumbnail and you are going to get freaked out and you are going to reject the reality that there is a Florida housing market that is down 38%. Well, I got news for you. There is a Florida housing market in Dade County, which I will share with you as we continue to go through all of the information that you need to know, but it's down 38% in the month of September. Now, the rest of the realtor associations will publish their data for last month at the end of next month. So if you're waiting for that data to come out, just know it's completely obsolete. It is completely old. It is irrelevant and it does not help you. So that is why I tell you what's happening in real time. And I am absolutely 100% committed 100% committed to sharing what's happening in each and every Florida housing market. So if you ever have questions, ever have concerns, please feel free to contact me. The best way to reach me is through clicking the link, which is streaming across the bottom of this. It's also in the comments. It's everywhere on my channel. But the Meet Chris link will take you to everything that you need to know in order to connect with me directly. Separate to that, my phone is everywhere. My cell phone number is everywhere. Just reach out, shoot me a text. I'll call you back. It is difficult for me to answer the phone in real time most of the time, but I will get back to you as soon as I possibly can. Now, that being said, right now the government is in the process of trying to determine whether they're going to shut down or not, right? And I'm not going to get all political here, but the House just passed a 45-day measure to keep the government open. Now, they sent that bill to the Senate. Who knows whether it's going to get passed or not? Who knows whether there's going to be a shutdown or not? It does not matter at all to what's happening in the housing market. Right now in the market, there are plenty, at least in my local markets, at least within the South Florida markets, there are plenty of buyers that are still ready, willing, and able to pay for what they want right now. That's not every market, to be clear. Now, if you are new to the channel, welcome aboard. I'm glad you're here. If you're a returning viewer, then some of these things that I'm about to share, you've heard me talk about before. I have said in the past that if builders start offering incentives that are meaningful, that is a tell. That is a leading indicator that the demand has very likely changed and they're experiencing that firsthand. So they're incentivizing the market by offering realtors inducements, bigger commissions to go out there and push their product. Now, I haven't seen that in years. Today, for the first time, I got a text from a builder who is not exactly in my market. So there are no, as of yet, so far at least, there are no discounts in my market from any builder that I'm aware of. Right, the demand for new construction in South Palm Beach County is off the chain. Now, other markets are a little bit different. Up north, there are markets that are absolutely offering different incentives. On the other side of the state, there are plenty of builders that are offering incentives. Different markets throughout the country, builders are doing lots of things to get those homes off their balance sheets. So what's happening in my market is very unlikely to be happening in yours. But that being said, I don't know. Wow, you can't see anything, can you? There we go. That probably wasn't very helpful. And because this is a live stream, I can't pop this in. But it goes on to say, new homes for your buyers. We're offering 5.5% fixed rate right now. Well, that's interesting. They're offering a reduced mortgage rate. How can they do that? It's because they've made a metric shit ton of money over the last few years, and they can do that. They can afford to do that. They are doing it. But right now, the mortgage interest rate is north of 8%. There are lots of folks that are priced out of the market right now with 8% mortgages. That's if you've got tremendous credit. If you do not have tremendous credit, chances are you're paying 9 or 10%, maybe more, depending on how bad your credit is and what your profile is. But that being said, none of that's new, right? So they've been doing those incentives for a while. But today I got a new one which says new homes, $5,000 realtor bonus on the next 3 home sales at our luxury community in Palm Beach. That's interesting. So builders have not offered a bonus to realtors anytime recently. I have not seen that in a long time. It was way before the pandemic. And the last time builders were challenged, it was a market out in Wellington. It was a new construction community, and they were offering 7% commission to a buyer's agent. Well, that's a meaty, delicious commission, period, right? I haven't seen that since, and that hasn't happened yet. But this particular builder, who happens to be up in the West Palm Beach area, is offering that. What's interesting is I'm working with a client who's shopping in that same market at this builder's site, but also at the new GL site at Apex at Aventura. And it's a tale of 2 very different markets, 2 very different demands. In the GL community at Aventura, they're doing a lottery. So you have to, and a lottery is exactly what you think it is. You have to register to be in the lottery. You have to sign on the line that is dotted and put down a deposit, which is refundable. But that only gets you into the lottery. The odds of you getting the lot and the home that you want are totally contingent on where you land in that lottery. But that tells me that the demand in that hyper-local market, which I talk about often, which is in the same geographic region as the other builder, the demand in that hyper-local market is completely different than the other. And that's the way it goes. That's how real estate works. The real estate market is always good for someone, period. Now, I do want to send some, we got some comments. Let's look at these comments here. Lisa Haley in the house. Been going on for over a year in Southwest Florida. Nothing new. Only quick move in, not to be built. How does that help the buyer? Only helps you. Who cares? Well, thanks for your concern, Lisa. I'm so thankful that you are interested in my financial well-being. And I certainly go out of my way to ensure that you've got the best information so that you can make the best decisions for yourself and your family. So I appreciate that you're concerned about my financial bottom line. It doesn't hurt the buyer at all, first and foremost. The builder pays the commission. It hurts the builder, but the builder is laughing all the way to the bank. Now, you may ask, well, if you're a buyer and you're buying new construction, why do you need a realtor in the first place? You can go directly to the builder and potentially save yourself a ton of money, right? Wrong. Here's why. The builder's sales staff is paid and is owned by the builder. So they're never going to advocate for you the right way. They're only going to advocate for themselves the right way. And whatever the commission is, the salesperson is getting it, period. End of story. So it's irrelevant. As far as who it's better for, what I do, which is different than others, is I'm going to hold the builder accountable. I'm going to have the inspector not come to the last inspection, which is the walkthrough, although I'll have them there too, but I'll have them be there at every step of the building process. That is critical to ensure that the builder doesn't screw up, doesn't cut corners, doesn't put in the wrong drywall, as an example. We're going to hold them accountable so you get the product that you want and you paid for. And not a lot of folks do that. Most people only go to that last inspection at the walkthrough. At that point, what's done is done. And yes, they might fix it. And yes, they might do some things, but they're going to be cosmetic only. If there's something foundationally hidden that you don't know about, good luck, or best of luck. But you will be having a warranty. You will be, for at least a year or two, anything that they screwed up on, they're going to eat and make right. But it's a huge pain in the ass and a huge disruption into your life. So best to do things the right way. Let's keep on going. We got Sparky 5960, higher interest rates and higher expenses causing lots of problems for buyers. Yeah, it's a shitty market out there right now relative to what it was in the recent past. There's lots of folks out there that are praying that we're going to see some sort of interest rate reduction, or we're going to see the Fed change their fiscal policy, or they're going to do something to manipulate the data in order to bring down mortgage interest rates. And I suspect that's likely to happen. It might not. I don't know. I'm not an insider. I wish I was. But from a historical perspective, if you go back to the 70s, mortgage interest rates traded in the high teens, damn near 20%. And even when they traded at 18, 19, 20%, people still bought homes. Somebody asked me this week, and I think it's a relevant talking point. When is the best time to buy a home? I get that about 100 times a day. And it's a great question. In this market that we're in right now, right? A lot of people think it's frothy. A lot of people think it's a bubble. A lot of people think there's a big correction that's going to happen. And as I mentioned, there is a market that's down 38%. We're going to cover it. We're also going to cover all the markets that I serve and any markets you want me to talk about. However, the reality of it is there's lots of folks, myself included, who can articulate a position that there are lots of things inherent in the system that are obviously going to break at some point. The question is when, and nobody knows that. But when is the best time for you to buy a home? And the answer to that is really simple. And I hope I don't get too much hate for this. The best time for you to buy a home is when it's right for you, period. That's the only best time to buy a home. If you're trying to trade the market, you will very likely lose. It's not about timing the market, it's about time in the market. And I'll use my sister as an example, which I'm sure she will not watch this, so I think I'm safe. But if you're watching, Danielle, shout out to you and thank you for this shirt. I forgot I had it, but I'm not necessarily the biggest Notre Dame fan in the world, but I am Irish. My mother won Miss Irish America way back in the day, but play like a champion today. Let's go. Play like a champion each and every day. Where was I going with this? When it's right for you, that's when you buy a home. So if you are in a position where you cannot afford to buy a home, don't buy the home. Don't get fear of missing out. Don't do it. Don't put yourself into a bad financial position. There are lots of folks out there right now, and again, going back to my sister, I got off point here. But when she went to purchase a home in my hyper-local market, in my neighborhood, in Canyon Trails, at the time, she was terrified that she was going to be buying, at the time, the highest priced home, period. And nobody wants to buy the highest priced home in any neighborhood. They want to buy the lowest priced home in a high priced neighborhood, right? And get that appreciation, build their equity. And there's a metric shit ton of people out there right now that are sitting on a metric shit ton of equity. It's not real until it's realized, and it can be vaporized real quickly, just like your stock market account can, just like your 401k can, just like anything that trades can. If the market dries up and there is no liquidity and there are no buyers, well, then prices drop quick, real quick. And pricing is set on the fringe minority of pricing. Meaning, if every home in your neighborhood is worth, I'm making up numbers here, $500,000, and someone gets squeezed out. They lost their job, they're in arrears, they have to sell, and they think they've got, and maybe they do, maybe they've got some equity, they want to cash in on it, but they can't get it at market rate. They go and they do a fire sale. They have to. Got news for you. Your $500,000 home is now going to be set by that low price, period. That's what your home's net worth in the near term. That's going to be, there will be volatility in the market. And again, I'm going to go to the market that's down 38%, but you're going to have to stick with me here. But it's happening right now. And getting back to the story with my sister, so she purchased this home and was terrified she was overpaying. What she did not know, but I quickly taught her, is, hey, if you want to buy this home, you can. But there are 4 other buyers right now that are prepared to buy it, that they were going to accept a contract with. I just was able to create rapport and create a relationship and create an opportunity for my sister to come in and win the bid, which she did. But what I asked her was real simple. I said, are you confident in your income and your job? The answer was yes. Are you confident in your husband's income and job? And the answer was yes. Can you afford to live the lifestyle that you want to in this home based on your financials? And she's an accountant, so I trust that she understands her financials. The answer was yes. I said, well, then set it and forget it. There's nothing to worry about, because if you were to buy this home for all the reasons that you wanted to, that made it your dream home, and it checked all the boxes, and the house went to zero tomorrow, what really changed? Nothing. Were you ever going to sell? No. Okay. What's your timeline in the home? The next 20 years or potentially more. Okay. Well, if that's the case, then you've got nothing to worry about, because over time, even if you bought at the absolute all-time high today and the market went to zero tomorrow, at some point in the future, your property, your home will be trading at a new all-time high, period. That's what happens in real estate over time. So it's not about timing the market, it's about time in the market. Now, if you don't know or don't feel confident that you've got a long timeline in a property that you're thinking about buying, well, then don't buy the home, because there is risk. And I suspect over the near term, which again is going to be different for each market and each location, each hyperlocal market, there's going to be volatility. There are going to be opportunities. There is going to be pain and fear and uncertainty in the market. And I don't say that as a doomer or a gloomer or whatever other people want to say I am. I'm a realist. I'm a capitalist. I know it's going to happen. And when they get squeezed out, there will be volatility in the market. What will happen? Someone will capitalize on it. An investor or someone else will capitalize on it. So there's nothing to fear but fear itself. Now, if anybody is pressuring you to do something, if someone is trying to induce you, and I guess this goes to Lisa Haley's comment, if it's not right for you, don't do anything. So when I talk to clients or people who are thinking about buying or selling, if it's not right for them, I talk them out of it. Don't do it. It's not right for you. It will always be right for me, because the market is always good for me. There's always someone who wants to buy, sell, or invest or rent, period. That's the way the market works. If, as a professional, you know how to pivot and serve and support those folks at the highest level, which I do. So I'm not concerned about any of that. All right, worst pending. This is Nick, 1981, 1000 in his ass. Worst pending home sales. Market frozen until it breaks. Not all markets are frozen, but I understand what you're saying. David Nathanson, spot on. Anything hidden will not be found out until years down the road sometimes. Yeah, that's 100% right. That's why it's critical that you hold them accountable and are part of the process every step of the way. Yes, but the homes were a fraction of the price back then. Yeah, real estate trades higher. And so my market is unique. And now there's been all kinds of speculation. Chronic dry mouth. It's probably because I talk too much. But yeah, there are where's I going with this? There are markets out there right now that are appreciating at a big clip, right? There is tremendous demand from lots of different places in lots of different markets in my market. Going back to the COVID thing, which I almost lost. If, as we get into the election season, as we get closer to the election, if there is restrictions or some form of shutdown that exists in other places, well, then I expect that what's likely going to happen is markets like Florida are going to be flooded once again. And there is a tremendous amount of people that are still relocating to Florida because they don't like the politics or whatever's going on in the market that they're in. So Florida is open, it's free, and it is pro-business. And that's just the reality of it. All right, so let's get into some data here because I think that's critical to talk about. And without further ado, let's cover the market that is getting crushed right now. Which I have to send a shout out to Chantel Sutherland. Now, you probably have never heard of Chantel Sutherland. I had not heard of her either. She reached out to me. She's interested in real estate. She was a realtor in California for a number of years, but she's primarily known for being a horse jockey and a massive winning horse jockey. I don't know anything about horse racing. The only horse that I know of is Secretariat. It's just not something that I follow. I'm not into, right? But she's referred to as the Danica Patrick of horse racing. So we had a great conversation, and she started talking about the market that she's in right now, which is Aventura and Bal Harbour. Now, both of those markets are in Dade County. I don't typically follow. Actually, it's not that I don't follow. Of course, I follow them, but I don't do a lot of business in Dade because I'm too far away. It's geographically undesirable. But we got to talking, and fascinating person. But she mentioned some of these cities and started talking about what's going on in her market. So I did a little bit of research and looked at, again, to be very clear, right now I'm talking about select property types. We're in Dade County. We're talking about Bal Harbour, which is a very affluent market. But the condo, co-op, villa, townhouse product type got completely eviscerated over September, period. Now, let's look at the numbers because anybody can make up data. I'm going to share what the real numbers are. And yes, they are pricey. The average active price for those product types in Bal Harbour were 5.389 million in September up to the 29th, which is almost 8% higher than the almost 5 million that it was the previous month. However, nobody cares what the average active price is. They want to know what the average sold price is, because what a seller wants and what a buyer is willing to pay are two very different things. But the average sold price, as you can see, is down 38% from 3.295 to 2,043,000. Now, before you break out the world's smallest violin for these folks, if you own a property in that market and you just thought you had massive equity in the property and you found out you're down 38% in a month, chances are you're not happy about it, period. So it's starting in some markets. And this is very different than what the single family home market looks like, but let's look at that next. So again, we're in Dade County. We're talking about Bal Harbour, very affluent market. And now we're looking at residential single family homes. And to be clear, I'm going to cover other markets too. But because of this conversation I had with Chantel, I wanted to cover these two markets because I never do talk about them. Well, these numbers are sick, right? So we're talking about single family homes in Bal Harbour, in Dade County, no sales in this month so far. The average active listing price is $26 million. It's up 10% from the previous month, which also had zero sales. So what does that mean? Well, if there's no liquidity, and in this case, when I say liquidity, I mean if there is no buyer willing to pay, then you don't have a liquid market. You have an illiquid market. So homes are not trading over the last 2 months. Well, that's interesting. I suspect if you've got a $26 million home, chances are you're not in the same financial bind that other markets are feeling. I would have to imagine if you are that affluent, you are dealing with a totally different financial playbook, which is fine. That's the way it goes. And fortunately, I speak that playbook very well. Let's go from Ball Harbor to Aventura. Again, you're going to see similar. It's a similar market. All right. Prices are a little bit lower, but again, it's affluent. So we're looking at right now residential single family homes in Aventura. And what you'll notice is that in August, no sales, right? The average sold price was zero, which tells me there were no sales. In September, up through the 29th, today's the last day of the month. I only have up till yesterday. I pay a premium for those services. But nonetheless, the average active list price was 1.896 and the average sold price was 1.663. So that's what the market is. Not a lot of liquidity, not a lot of volume, not a lot of trading happening in that market, but that's what it is. Now let's look at condos, co-ops, villas, and townhomes in this same market in Aventura. And what do you see? Similar dynamics. Average sold price down 9.7%. Not the whopping 38%, but still no bueno if you happen to be a property owner in that market. So it was 629 last month. It's now 568. No bueno. But look at the difference between the average active price and the average sold. Sellers have a higher opinion of price. The market does not care what you think about price. The market does not care what I think about price. The market does not have feelings. The market only cares what a ready, willing, and able buyer will stroke a check for right now. And that is what it is. Period. End of story. Supply and demand will always dictate price. But that's it for Dade County. Now, let me check in. Any more comments? No, that's all right. If you have any markets you want me to cover, leave them in the comments. I'll cover them. Let's move to Palm Beach County. And let's go to the markets that are primarily the markets that I service. And let's start with Boynton Beach, the city in which I reside. And we're going to look at single family homes. It's not what I think the market is, but what the market is based on the data, period, right? So we're talking about single family homes. We're in Boynton Beach. Boynton Beach is a massive geographic region. So to be clear, within each city, there are going to be hyper local markets that trade totally different than the macro market will, right? Micro, different than macro. Intensity of supply and demand is going to be very different in different markets. But the overall macro number for Boynton Beach, average sold price is up 6% from 596 to 632. That's storing mortgage interest rates skyrocketing to 8%. People are still ready, willing, able, and must move, period. And yes, there's a lot less sales volume, but don't get that twisted and think that there's no sales volume. There's absolutely a market out there that is very happy to be buying in Boynton Beach, or selling in Boynton Beach, but only because it's right for them. So that's Boynton Beach. Let's move over to Delray Beach, which I know took it on the chin a little bit here. And again, we're talking about single family homes only. We're talking about the macro picture. And if you're shopping in Boynton or Delray or really anywhere and you want me to get granular, you want me to get hyper local, I'm happy to do that. Reach out and I'll get you up to speed immediately, because without that information, you are just flying blind. And if you're relying on the realtor associations, which publish this data, just know that almost everything that you're looking at is completely obsolete. It is not real time. Real time is everything, and yesterday's news is an academic exercise with no economic value. Average sold price in Delray Beach for single family homes is down damn near 7%, from 1.239 to 1.155. Down 7% in a month is no bueno, but let's look at the pattern. Let's continue to track the trend. Will it look like this next month? Yet to be determined. I don't know, but I suspect we're going to start to see much more volatility in the market. All right, so that's Delray. Let's look at Boca Raton. There you are. And again, this is single family homes only. Average sold price in Boca Raton up 8.2% from 1.302 to 1.409. 8.2%. Now, I suspect in most of the markets that I cover for the next 12 months, and I'll go out on a limb and call it even the next 24 months, I suspect we're going to see minimum single-digit appreciation in all those markets, which does not mean that there won't be volatility or opportunity, because I also know that there are going to be people who live above their means and feel financial pain and get squeezed out. But they've got so much equity that I suspect they will just list and sell their home, and we'll start to see different pockets of opportunity in different hyperlocal markets. But I don't suspect a fire sale anytime soon in any of these markets. All right, let's check it out. Interested in Central Florida markets, particularly Orange and Seminole counties. All right, let's look at those counties. Now, to be totally transparent, always ultra. I'm always playing like a champion today. I'm not in those markets, right? So I do not have the boots on the ground, real-time data in any of those markets. What I do have is boots on the ground professionals that are able to, I have vetted the top professionals in every market everywhere. So anytime I refer someone to another professional, I ensure that they speak the same language that I do. I ensure they understand the market the way I do, and I ensure that they know how to advocate and negotiate for whoever it is that I'm referring them to the right way. And if they do not pass the sniff test, well, then they do not get the referral. But I spend an enormous amount of time making sure that you get connected with the right people. Define collapse. Nick, see, I am fairly certain that you will be able to use the Google machine and figure that one out on your own. As much as I would love to give you the answer, I have learned that it is best for me to guide you to the answer so that you can figure it out yourself. It's not even going down in 2019 prices. If it's not going down in 2019 prices, it's not a collapse. Well, I don't disagree. And I don't suspect, if you've listened to anything I've said so far, that we're going to see a collapse in any of the markets that I service in South Palm or in Palm Beach County, period. It's just not going to happen. Which does not mean that there will not be pockets of opportunity in which there will be distressed sellers. If you want to see what the distressed market looks like, I will not take you to the data distributed by the realtor associations, because if you look at that, it will demonstrate that there are zero distressed properties essentially anywhere in the state of Florida. However, if you go to your local county auction site, I guarantee you that there is a tremendous amount of folks right now that are in financial distress that are selling, that are getting their homes auctioned, that you can go in and negotiate on those auction properties. Now, that is a very different process. None of that hits the MLS. None of that gets shown in the data that's published by the realtor associations. But I think you would be shocked, because I was shocked when I started doing that research for myself, because I know there's a lot of folks out there that are on the fringe of being able to stay in the lifestyle that they think they can. I know there's opportunity. And so when I recently checked, they've got auctions scheduled twice a week out until January or February of next year. The folks that are being auctioned off at market today are not people who went into foreclosure recently. These are folks who are feeling financial pain and stress or distress a number of years ago. So it takes a long time for someone to go through to actually get, for a bank to take possession of a home. If you've got a homeowner who's in that and even got any sense of how to play the game, they can be in that house for years before they finally do lose possession and the house actually gets sold at auction. But I just noticed there was a massive deal where there were some non-performing loans, and I forget what the numbers were, but I think it's something close to hundreds of millions of non-performing loans that were sold, packaged, and bought by another investor. And so it wouldn't surprise me if, when there is a quote unquote collapse, if those foreclosed on homes or those distressed sales, I don't know if they ever see the light of day. I don't know if they ever hit the market. I don't think they will. I think that they will be chopped up and sold either to an investor or to an institution. And there will be, it will all be done behind the scenes. We won't even have a chance at it. But I don't know. I'm not an insider, and I hope I'm wrong. I would love to see a massive correction, because if that happens, I'm going to go out there and build a portfolio to where I never have to work again. Pick up $1,000. All right. Looking at Martin County, Palm City, and Stewart. So let's see here in my bag of tricks. What did I do? No, I don't want the community. I want the city. Let's see what that opens up to me. I'm looking for Stewart. Here we go. You want Stewart, you get Stewart. And let's look at single family homes. Ooh, wee! Stewart is taking it on the chin in September. Average sold price down 21% from 683 to 540. Now, I cannot right now break this down on a micro level for you. But if you are shopping in that market and you want hyperlocal data for the markets that you're shopping in, that I can absolutely do. So please reach out. I would love to get you hooked up. So you talked about Stewart. I think I saw somebody talking about Westlake. Palm City. What's up, Silvio, in the house? Good to see you on here, my man. What the hell am I doing? Stewart, Westlake. Neither of those is what you talked about. Palm City. Palm City in the house. Let's see what we got going on in September. All right. So we are now in Palm City. We are looking at single family homes. And what you see is lots of single digit declines, right? So again, Stewart is not in Southeast Palm Beach County. The market is going to trade very differently in these other markets that are not Southeast Palm Beach County or West Broward or anything waterfront, right? These are very, very different markets. But nonetheless, down 6.7% from 986 to 920. And that's what it is. Somebody asked about Westlake. What do I think about the development in Westlake? Donna, I was blown away by Westlake, and the affordability that it offered was incredible. Now I know that the market has changed radically over the last couple of years as they've developed the city and the communities in it. But when I was shopping for buyers who were looking in Westlake, they were able to essentially buy the same model home that GL puts out. Um, and I want to say that the price for that home decked out was something, which again, the market that I'm talking about, I'm comparing it to, was in Boca. It was in Lotus. But at the time, you would have to pay something close to 2.5 million to $3 million for the decked out, fully loaded home for GL, same model. You could get that same model in Westlake for literally half the price, and still pricey, but relative to what you would pay in Boca, a massive discount. Now, those discounts have started to disappear. They're starting to be much more price equilibrium. Not exactly equal. It's not an apples to apples comparison yet, but what they've done in Westlake is incredible. It is a really nice place to live, and I know lots of folks that are out there right now. The knock on it for me was at the time, it's kind of in the middle of nowhere. That's changed. So much of the area that's surrounding it has been developed. It will continue to be developed. So I suspect Westlake is an area that you won't go wrong. But I've got shoppers who are still on the fence about Westlake and waiting for anything that resembles weakness in the market. And all they've seen is price increase after price increase. And I hope they're not priced out of the market, but until it's right for them, it's not right for them. But waiting has cost them a significant amount of money, because now to buy the same house that they wanted to buy a year ago or 2 years ago, it's just more pricey. So that's what it is. Now, let's talk about the future, right? Because the reality of it is there are so many things that I think are just being manipulated in terms of data that we're seeing from different government agencies, right? So I don't believe the inflation number. I don't believe the unemployment number. I don't believe any of the numbers that they're distributing. They don't make sense. They don't pass the sniff test. And what I'm seeing locally, and I'm starting to feel, is there are a lot of folks out there that I know are feeling financial pain. But everybody's waiting for, oh, well, we're going to see, and it may actually happen. In fact, I've predicted what will happen is as we get closer to the election, somebody's going to do something. Not sure who, but they're going to manipulate the data sufficient enough to bring down mortgage interest rates, which, if they do that, will be a massive run on the market. There are so many folks that feel trapped in their home right now because of where mortgage interest rates are, that there's no way that they're going to trade out of a 2% mortgage into an 8% mortgage. It's just not going to happen. If they were to do whatever if they pull a Harry Houdini and pull a rabbit out of their ass, well, then I think it's possible that we could see interest rates come back into the fives. If they go into the fives, I think the market goes bananas everywhere, specifically in Florida. We'll be off to the races again. It will be another 2 years of just insane appreciation. But the competition that you will face when that happens is also going to be insane. We're going to be right back to the bad old days where you don't get to see the property. There's already 10 buyers that are lined up. You got to instantly write a contract, and it's going to be a very difficult proposition to buy a home, not because it's not easier to buy a home, but because it's easier to buy a home, there's going to be just insane demand. So if that happens, we know how to handle that, and we'll be able to serve and support you at the highest level. But it's going to take the consumer being rocked by fear, and until someone actually feels the financial gun to their head, they're not going to make moves. They're just not. So I think we're going to see some tremendous volatility that comes into the economy, which is going to bring down prices significantly. But for that to happen, what's going to happen first before the market falls out of bed? You're going to see the stock market fall out of bed. you're going to see other markets fall out of bed. But until a bank, and even the banks that have failed, have been instantly absorbed by the government, Chase, but that might as well be the government. So there is so much going on behind the scenes that is never been done before. And we are in a position from just the country in general is being run fiscally so irresponsibly and has been for years that I don't know what games they can play or what can they can continue to kick down the road. But I know it's possible that they can do lots of things that have never been done before. I don't want that to be the case. I know that that's robbing from the next generation. I know that that's putting our future in jeopardy because it's never been more expensive to live right now. And yet they continue to bail out and print money. So I don't, at some point, something has to break. And when it does, when there's real systemic failure, that's when you're going to see prices drop. When that happens, it will be there. When that happens, lots of folks are going to get hurt, period. Right. And separate and also true, lots of other folks are going to capitalize on the weakness in the market. And, there are plenty of examples of that. Even more recently, Warren Buffett just stepped in and bought several $100 million worth of different real estate related equities and companies. So he's betting on long-term real estate appreciation. Again, I don't know. Just because the Oracle of Omaha makes a bet doesn't mean that that's what's going to happen. But I can argue both sides of the fence on this till I'm blue in the face. At the end of the day, what I think is totally irrelevant. It's only what's right for you. If it's right for you and you have a need to buy a home, there's a big wealth effect with 401k. Yeah, correct. There's the wealth effect is, I've never seen anything like it, right? There are so many people who feel rich because of where the stock market is right now. They feel wealthy. Because of where they're at from an equity position in their home, they feel wealthy. There's lots of folks that are fake rich that think that they're fine up until they're not, up until somebody loses their job, up until their car gets repossessed, up until they can't afford groceries. And because Florida is such a big and diverse market, we've got, every type of consumer that's out there. So some people are feeling it a lot more than others, and others aren't feeling anything. It's what's right for you. At the end of the day, that's all it comes down to. If it's right for you, and if it's right for you to buy or sell, and you need help with anything, please reach out. We would love to help. But that's it for now. That is September in a nutshell. You can wait till next month for the different real estate organizations to publish what happened in September, but I gave it to you in real time, and I hope you appreciate that. Check out my next video because I suspect you will love it a lot. If we can ever help, reach out directly. And until next time, peace.